Well, nobody saw this coming. Businesses haven't planned for it, and for many of them, it could be the end of the line. But Michael Fingland from Vantage Performance says, don't give up hope. These are not usual times, and many usual rules don't apply. There are payment deferments, government stimulus, low-cost loans, and a desire from everyone to keep businesses alive. But you need to act now to ensure you sail through this in one piece. I'm Phil Dobby, and today on the Vantage Performance podcast, how to develop a rapid business stabilisation plan to cope with the impact of COVID-19. Well, lots of businesses today will have no money coming in. Some might be experiencing big cuts in revenue with an inability to cut overheads. Add to that, of course, we don't know how long this is going to go on for. What we do know is we can't sit on our hands and wait for it to be over. That's why you need a business stabilisation plan pretty pronto. Michael Fingland, Executive Director and CEO of Vantage Performance, is here to help us get cracking on one. So everyone's going to need this, Michael, I'd assume. I can't imagine any business is not going to be facing a very different set of numbers this month, next month, and probably the month after.
Exactly right, Phil, and good morning. Certainly, I mean, a typical 100-day stabilisation plan, 100-day work plan, whatever you call it, is critical in any turnaround, and that's always step one in any turnaround process. But you know, it's even more critical in the current climate. I mean, we've seen a huge spike in activity, new clients, and the size of clients as well. I mean, we're working with 5 clients turning over $500 million and higher, and then you've got all the typical SME mid-market clients that are all concerned about their cash flow, all concerned about how this is going to impact on their business. So we're doing a lot of sort of liquidity workshops and 100-day plan development, so we can give them some peace of mind that there is a pathway through this, and you know, it's going to be difficult. There are some initial initiatives, different things you can do in this current climate that you perhaps couldn't do previously. So there are options available, but you have to move quickly. And
for everybody, I mean, if my revenue is down to zero, if I just can't perform now. I mean, it's a lot of businesses will be going, well, you can tell me I need a plan, but it's clear to me I just can't survive.
Yeah, well, there are, as I said, these are strange times, and there are a lot of things you can put on ice. The government in Australia is talking about, another wave of initiatives to effectively put businesses into sort of the deep freeze, as they're calling it in the media at the moment, which is, the government's already come out with a raft of packages, which we'll come on to, but such things as, freezing the ability for landlords to evict businesses and tenants. There's low interest loans that are available. There's a freeze on basically paying tax at the moment. So there are a lot of things that you can do to sort of preserve your cash and create as long a runway as you can. But as you rightly point out, if revenue doesn't start to bounce back, some businesses won't survive this, and that's the unfortunate and terrible outcome of this crazy disease, which is having an untold toll on mental health as well as everything else. And we haven't seen, there's going to be a huge amount of impact on society once we get back to full throttle. But this is about taking a whole bunch of steps now, which we'll run through, which gives you the best opportunity to rebound once this crisis is over.
Well, I mean, there's a lot to talk about, isn't there? So, look, we'll do other podcasts, obviously, to try and help people through these difficult times. But a normal business stabilisation program, you'd look at the 3 things: stakeholder communication, working capital initiatives, and then looking at how you restructure your operations and your finances. So maybe we should work through those, because it's pretty much the same, isn't it? We're just doing it all in a far more compressed time period.
A lot more condensed. So just really rapid sort of liquidity workshops where, we had a workshop about a week ago for a client turning over 700, and we came up with $55 million worth of initiatives in about 3 hours. So if you know what you're doing and you know where to look, you can identify significant savings. Obviously that's a large corporate example, but there are a lot of initiatives that most businesses are simply not aware of because they just don't do this day in, day out. And that's what we want to provide a bit of insight into today. So, and we've created a sort of shortcut version, if you like, of our standard 100-day plan, which builds in all the additional initiatives that government, state, federal, etc. are rolling out. And if any of our listeners would like a copy, happy to provide a copy, because the reality is there are going to be so many businesses in distress and near collapse that as a firm, as an industry, you're never going to be able to actually help them all. So we're basically saying we're happy to provide this cheat sheet, if you like, so businesses can actually do a lot of the heavy lifting themselves. We'll provide the guidance, but they can actually carry out a lot of these initiatives. So we've sort of converted our standard 100-day plan, if you like, into a sort of a really direct kind of do this, do that type of checklist. So so SMEs can
well, so we do a couple of those then. If we go through those three categories, so stakeholders, there's a lot of stakeholders, and there'd be a fear, wouldn't there, if you approach some of these stakeholders and say, look, we are in trouble, they're going to be getting similar approaches from other people, and they're going to be saying, well, look, I don't want to hear about it, I'm not going to help you.
Yeah. Look, first and foremost, stakeholder communication, it is critical in any turnaround, okay? But it is just extremely important, more so now. So what I mean by that is, like when it comes to your staff as a business owner, large or small, they are all scared. They're always scared about their job when they know you're going through a financial turnaround or crisis. So you need to up the ante. You need to have daily huddles. We're big fans of the Vantage Rockefeller Habits daily and weekly huddles. So have your short 15-minute daily huddle with the team. What are you up to today? What are the key deliverables for the day? Am I stuck? Do I need any help? So that just creates a forum to improve communication. It's a simple tool, but in any sort of business that gets into crisis, the lack of communication is always the biggest gripe by employees. So if you want to try and hold your morale together and your employees together, even if they're in a shutdown, even if they're locked down, there are things that they can be doing to keep busy. But keep up a daily huddle. You can do it on video, Skype, Zoom, Teams, whatever, or even just a teleconference. Do a daily 15-minute huddle and a weekly huddle about the plans for the week. Keep that up. Internal newsletters. As leaders, you need to be talking to and make sure your management team are talking to your staff, asking if they're okay, because they're all scared right now.
Yeah. So what they'll be scared about is whether they're going to have a job or not in a couple of weeks' time.
Yeah, that's right. And that's why you need to do all of these initiatives so you can give them the comfort that you've extended your runway. This is all about extending your runway to get on the back end of this. And we will get on the back of this. This is an unusual and different crisis, but it's a crisis all the same, and crises will pass, as this one will. It may mean that we all have to go into lockdown for 3 or 4 weeks, which is my personal view, and just try and kill the virus and then reboot. But I'm not leading the charge. But this is all about creating longer runway, so you can give your staff comfort. It may mean that the team might have to go to 50% pay or stand down, but that give them comfort that there will be a job to come back to. So that's what responsible leaders are doing with these liquidity workshops and 100-day plan programs to lengthen their runway. And what we want to do today is make sure that everyone's across all the support measures that are out there. So again, whether we're helping them or not, they can get a lot of these things done themselves. So financiers, right? Always critical in any turnaround. You need to talk to your financier. They're giving automatic 6-month payment holidays right now. Some banks are giving automatic extensions of facilities up to a certain percent. Covenant waivers. So if you've got certain waivers that are tested every month, every quarter, every 6 months, request an extension of those covenants, so you don't end up in default. So they are doing everything they can to ensure that businesses don't collapse. Banks don't want you to collapse in any situation, particularly now. And the RBA has come out with essentially a $90 billion backstop package to banks so they can offer those 6-month holidays. So talk to your financier immediately and request and talk to them regularly. I mean, they're going to get inundated if they aren't already. So, but keep that communication lines open. Like in any turnaround, if you keep open, honest communications going with your financier, they will help you.
On working capital, I guess, you've got to look at your cash flow, haven't you? And there will be a whole load of things in there that normally you would say, yes, we have to pay that. But some of those you can, I'm assuming now you can say, well, we can push that back. Yeah, we can push it back 3 months or 6 months.
It is a whole new world. It's a whole new world right now. So with customers, and this is one we always do, but it's proving quite fruitful in these current plumps. If you're a business that is a critical supplier to one of the majors, such as Woolies, Coles, BHP, one of the big corporates in Australia, they are awash with cash. I mean, the whole supermarket industry, they are awash with cash because they're churning over so much in terms of sales. So they need to protect their supply chain. Okay, so if you might think that's a fruitless exercise, as if my debtors are going to pay me earlier. Some are. Like BHP, we started telling all of our clients in the mining services space, the major miners who are awash with cash, they'll use this as a PR exercise, as will Woolies and Coles and Aldi and all the others.
Yeah.
They have the cash to be able to do this. They'll use it as a PR exercise as well.
Yeah.
Sounds a bit callous, but that's the truth.
But they might also want you to survive. I mean, they might be seeing if they see you as a good supplier, they want you to survive. They want to make sure.
So you need to have a think about your customer base. Are you an important cog in their wheel? And if so, request them to go to 7-day terms or cash just for the next few weeks while you get through this. So we're already having significant success on that front, and clients hadn't even thought of it as a possibility. But you need to understand, like in any negotiation, in any turnaround, try and put yourself in the other person's shoes and try and work out that angle when you're looking to negotiate. Same with creditors. We always rank creditors into A, B, and C. So A's are those, this is when you're working out payment plans. A's are those that will stop your business if you don't pay them or negotiate, a shorter term payment plan. B's are those you can probably get 30 to 60 days out of, and C's are those that you can switch out with other suppliers. They're not critical, and you can push them out even further. Now, the government's come out with an initiative which basically says if your debt's under $20,000, even if they take legal action, you've got up to 6 months before you need to address their statutory demand. So in reality, that's an 8 to 9 month delay by the time they issue a demand, then 3 more demands, and then a stat demand. So effectively, all debts under 20, if they're not critical to you, you can push out for 6 months. So when we're looking at building up cash flows for clients at the moment, we're basically saying start at net wages and you build up from there, and then we'll tell you what we think is absolutely critical up and above that. But that's as sort of crazy as this is right now. Net wages. I mean, the government's rolling out a whole bunch of credits for tax, payroll tax reprieves. The Queensland government's offering a payroll tax refund for payroll tax you've already paid in November and December. Other states will follow with similar measures. Yeah. But they're offering an absolute holiday for January, February, March. That'll likely be extended to June, and then no payroll tax for the next 12 months. So there are significant outflows that you can take out of your normal cash flow that you wouldn't normally be able to do in a typical turnaround. And that's the lens you have to look at this through. This is a totally different world. I'm only going to pay those that stop my business, assuming that business is still trading. With staff, as I said, with creditors, the message is right now, even if they're an A creditor, where and this is the standard messaging, right, in a typical situation as well. We're currently working out the impact on our business. We're working out a range of payment plans. We'll come back to you once we've got clear visibility, and that'll always buy you 2 or 3 weeks. So that needs to be your standard messaging to your creditors. Otherwise, I'll just keep calling. And then you've got time to build your 30-week cash flow, as you mentioned before, and your 100-day plan of all the initiatives that you're going to build in to lengthen that runway. And then it's time consuming and painstaking, but you're just going to have to go through your creditors, and that's why you rank them A, B, and C. You focus on the A's first in terms of negotiating ongoing support and payment plans.
How else can you either cut your costs or put your costs back? What other moves can you make?
Yeah, so we'll talk through the sort of the second step then, working capital initiatives. So we've talked about early payment initiatives with your major customers. Certainly do that. We've talked about A's, B's, and C's. Financial support. Again, some companies are getting an increase in facilities, not just a hold on their existing facilities. So certainly request more. You never know what you're going to get. Federal and state government, we've talked about a range of their initiatives. ATO for POIG and GST, they're offering credits for up to 50 grand in April, 50 grand in July for businesses under 50 mil. There's going to be my personal view, as we were talking before the podcast, is that I think we'll end up in a position where the federal government, ATO, which is effectively Treasury, will offer an amnesty for debts up to a certain point. Because once we come out of this, there's going to be such an amount of debt to plough through, because you've got delayed bank payments, you've got delayed creditors. There's going to be so many zombie companies that we're going to end up languishing for 10 years unless there's a reset.
So that means however bad the numbers look on your spreadsheet, if it looks bad and you think I can't continue this business, don't give up hope, seems to be what you're saying, because there's going to be a lot of other businesses in exactly the same boat and the government is going to have to step in somehow.
There's a lot of psychology in this. There's a lot of psychology in turnarounds generally, but particularly now around having that positive mindset, right? And that perseverance, which is one of the most important qualities when you're going through a turnaround. This is a totally different landscape. The rules are being rewritten as we speak. As I said, our view at Vantage is that we are, and we've already been talking about things that we thought were going to happen, such as, BHP and Woolies offering 7-day terms to keep this. That's happening. The ATO offering credits, haircuts. That's already happening. I mean, the 50 grand credit, and this is what we're telling clients around the country, the 50 grand credit that SMEs, will get straight into their ATO account at the end of April and end of July. That's a haircut. That's just a more efficient haircut.
Yeah.
They are giving you a credit of 50 grand and another 50 grand. So that is a haircut. I think that's the first wave. I think when we get to on the back end of this, there is, as I said, outstanding tax to the ATO went from 12 billion to 30 billion after the GFC. 18 billion straight away within 2 years, and that's all the payment plans. And then now it's over 30. We could easily see this go to 40, 50, 60. There is no way in the world that SME businesses are going to be able to pay that back. So hang in there, even though you might think that your debt burden is just going to be too insurmountable. I'm not so sure. I firmly believe, as I said, there will be some sort of reset, because otherwise we are in a 10-year malaise, because the debt burden will just be too great. So don't think that all hope is gone, because I think we've only just seen the start of the support packages, in my view, and there's going to be wide-reaching options available to restructure your balance sheets just to clear the decks, so you can rebound quickly. Right,
okay. It doesn't mean, of course, that you shouldn't do everything you can to try and increase that working capital, or at least minimise the reduction in it.
So down to things like rent, okay? So we're telling every client to negotiate a 3-month holiday on your rent. Now, we said that there's likely to be legislation coming out, in our view, that legislation will be passed, putting a freeze on landlords' ability to kick tenants out. So in the last 24, 48 hours, it is moving that quickly. Different states are now talking about that. It may be just residential, it might be business as well. And what they're looking at, because the issue with landlords is landlords have insurance which backstops them if a tenant defaults, but they only can claim that insurance if they evict the tenant. So there's a structural issue there which is counterproductive in the current climate. So what you may see is banks now also backstopping insurance companies so they can allow tenants to be paid and result in less people being evicted. Or there's going to be laws passed that says you can't evict tenants for 4 months, which is the window of this crisis. So when you're working out your cash flow, that's why I said you start from net wages and then you build up from there. Assume payment plans for your bank, most creditors, landlords, a whole range of normal things you can put on ice, at least for the next 30, 60 days to get through the back of this, because everyone's in the same boat. And the government's basically, with their rafter packages, are effectively saying we're all going to hold each other's hand on this for the next few months, and we're going to stop people being predatory. We're going to put some laws in place to stop people taking advantage of these situations, and which is a good thing because this is unprecedented. And if we don't do that, then there will be collapses on a scale that we've never seen before. And that's why I firmly believe that there will be some mechanism of debt reset on the back end of this. And at the end of the day, if it takes us 20 years to pay it off, it takes us 20 years to pay it off. And it'll be through higher taxes. Corporates will pay a higher tax rate, as will individuals that are paying tax, and that's okay. We're on this together.
Yeah. So normally, when you're looking at a restructure, you'd be saying, "Well, okay, how do we restructure the business? Do we change the focus of the business? Do we get rid of various product lines? Do we look for new opportunities?
That's right.
Do we do all of those things? Because it seems like if things were fine before,
absolutely.
But is it the right time to restructure the business? Have you got time to do it over the next few weeks, for example?
Well, if we're all in a bit of a slowdown, then you've got time to think strategically, and that's why having that positive mindset is so critical. So a lot of businesses, before I come on to that, I'll just talk about overstocking. So a lot of businesses end up overstocked, and they'll be overstocked right now. So put immediate stop on purchase orders for areas that you're overstocked in, because if you run those down, that creates cash, because you're not incurring new creditors that you're going to have to pay later on. So that has to be part of your 100-day plan is running down stock that you're overstocked on. But then looking at how do you release cash from your balance sheet, basically, which is coming on to sort of financial and operational restructuring. So if debtor finance, invoice finance is a great tool for unlocking, where you basically start selling your invoices to a financier for upfront payment. So that's a great tool in a turnaround situation generally. Anyway, even more important now, and the major debtor funders are all backstopped by the major banks, and that's where they have their wholesale funding lines. So they've all confirmed to us, because we have a number of clients who use it, that their wholesale lines are lock solid and they're open for business. So that is a definite tool to look at to create immediate working capital. There are a lot of high net worth individuals, family offices that are awash with cash. So they are, you might think that who would lend money to my business? Who would invest in my business right now? I can tell you we're having some significant discussions at the moment, the term sheets for high net worth family offices, mezzanine financiers who are backed by those sort of same people who have a lot of firepower, who also see this as an opportunity. Just like the GFC, there are people that panic. There are existing financiers who might want to exit. They are special purpose, equity, debt outfits that are comfortable taking these sorts of risks. And you're going to see a lot of businesses saved by that wave of capital. So it is there. You need to have your 30-week cash flow, your 3-way forecast, your 100-day plan. You need to give them all the usual things that you would in a turnaround. And that's why we're saying in this, if we are in a lockdown situation, you've got a 3 to 4 week window to get all that ready, so you can start negotiating support packages either from your existing financiers or incoming financiers that we can arrange. So you can have that firepower. So when we come out of this, you're going to take advantage of the malaise, and you'll be more likely to survive. Whereas unfortunately, a lot won't, because they just won't have done that work. So now is the perfect time to sort of get that homework done, so you can get term sheets, facilities sorted. So as soon as the lift has come, you can solve the issue and get moving.
And if it is a closed down situation, a lockdown situation, I guess you've got to look at what you can close. How can you cut your costs to the minimum? Yeah,
and look, we've seen, obviously working with multiple large listed companies and mid-market companies over the country in the last 15 years, but there's been a rush of obviously new clients in the last few weeks. So we had multiple legal advice around stand down options, legal requirements. So if you're governed just by Fair Work, you can stand down without pay, and there might be a requirement if you've got an EBA or a certain award that you're also governed by, which might mean you also need to consult with your union or whatever. But you should be doing that anyway. But a lot of businesses, sometimes it actually makes more sense to stand them down with that pay, so they can actually take advantage of the government support package.
Yeah.
If you put staff on annual leave and pay them, so even if you can afford to, means they can't actually access the government support package. So actually the right thing for some employees is actually to stand them down with that pay, so they can access that straight away. And then if they are still employed as opposed to made redundant, then their annual leave and other entitlements keep accruing, even though they're temporarily getting government support. So again, you need to look at that. There will be rolling stand downs; they're already happening, but that's all about preserving cash. The government's already got the money there. It's not as much as what a lot of people will need, but we're in different times. But sometimes a rolling stand down, whether it's the whole business for 2 or 3 weeks, or a rolling shutdown across different sites across the country, if you're a national business, that can still keep some emergency products or some core products still being produced, but you're not bleeding as much cash, and then you're preserving that runway so you can make sure those jobs are there, when this crisis is over.
Now, you mentioned the idea that you want to run down those overstocked items. You want to just focus on what's selling. I guess that means you do the same thing on the supply side. Deal with fewer suppliers.
That's right. So again, most businesses end up with far too many suppliers. So this is an ideal time. We always talk, Phil, as you know, about identifying those 1 to 2 big changes in strategy, which is a fundamental part of our turnaround philosophy. And this is, again, the perfect time to look at your business with that lens and run a sort of a situational analysis workshop, a strategic planning workshop. What are those 1 to 2 things, if we're going to take advantage of this quiet time? And I know it sounds really weird saying that, but if this is a time when you've got time to think about this, what are the 1 to 2 big changes we would make to our business right now? And then model the business around that. So it might be rationalising your supply chain, which also then means you reduce the number of creditors you have to pay through this period. What are the key products or services that really aren't making any profit? Do we cull those now? Do we have sites that were borderline before? Shut them down now, because they're assets you can then sell to bolster your balance sheet, etc. So whether you're running down, so if you're getting rid of a product line, for argument's sake, that's marginal. If it was marginal before, it's not going to be profitable after this. So sell as much of that as you can, whatever you can get for it, because that will boost your cash flow, because you're not having to reinvest in that product line, in that stock line, in that factory that's superfluous. So look at your non-core assets, which ones are surplus, which are non-core. Yes, you might get some depressed prices right now, but as I said, there is a lot of money sitting on the sidelines to pick up real estate, to pick up investments in businesses at very cheap prices. There are lifelines there, but you need to act now and as I said, use the next 2, 3, 4 weeks, which is a unique opportunity. If you've got that mindset, this is a unique opportunity to have that fresh look across your business, build a business plan that's going to be more robust on the back of it. There is money to support businesses, not from the usual places. There is a lot of money sitting there because they've all got out of shares in the last 2, 3, 4 months. They're sitting on piles of cash, and they'll be looking for cheap investments, cheap assets, which, yes, it's a depressed price, but it still provides a lifeline to your business so you can rebound.
And I guess it is, that rebound is the word, isn't it? I was about to say that. It's all about who comes out of the starting blocks the fastest with the most nimble business. And who knows, after all of this self-assessment, you might actually come out and discover there's a product that you should have been selling that you hadn't thought of, or a new way of operating, a new way of servicing customers, which is going to give you a head start on the opposition. So, positivity and bad numbers doesn't necessarily mean your business is going to collapse, because, as you say, these aren't ordinary times. We should leave it there, Michael, because I know we're going to talk lots over the next few weeks, but lots to think about there. Thanks for your time.
Cheers, Phil.
And I'm sure there is lots that you would like to know, so make sure you subscribe on iTunes or SoundCloud or your favourite podcast platform. Just search for Vantage Performance Podcast, and Michael will be back with more detailed advice to help you navigate through these difficult times. I'm Phil Dobbie. I'll see you next time. Thanks for listening.